And welcome to Commodity Champions. I'm Manisha Gupta, and we have seen a huge movement coming in case of the commodity prices there. If you look at the gold prices, Jan started on a positive, Feb saw a sharp decline, and then we have seen March prices trying to consolidate. The metal beaming in news this week clearly has been gold. We've seen all-time highs in India so far in this year itself, and an anticipated 25 basis point of a repo rate hike by the Monetary Policy Committee and a decline in the US dollar index have clearly been supporting the yellow metal. This week, it particularly is crucial for gold as the RBI has launched the last tranche of sovereign gold bond scheme for FY23. The series is open from subscription from 6th to 10th of March. The issue price fixed at 5,611 rupees per gram of gold. And on the global front as well, the demand for gold has grown by 18% in the previous year at around 4,742 tons, which has been the highest since 2011. And this is as per World Gold Council. So there clearly is so much happening in case of gold, whether it's about buying or the HUID. To talk all of that discussion forward, let's talk about the fundamentals itself. And we have started 2023 on a stronger note. And as I said, since those kind of levels, we've seen a huge amount of profit taking as well. Coming to you, first of all, Peter, what's your sense on the factors, fundamentals that you will watch from here on for gold?
Well, Manisha, I think a couple of things I've got to keep a steady eye on. Certainly US dollar index. We're conscious as far as Jay Powell's rhetoric and where we move this week. The inflation story hasn't seemed to, well, I don't think that's been put to bed at all. And how much further do central banks raise rates over the next quarter? And I feel as though that there's going to be a lot of volatility come across FX space. And I think that that's going to create sizable moves across commodities and certainly the precious metals.
Peter, what is your sense? I mean, as Chirag mentioned out that we, constantly see the money moving within asset classes, a lot from equities, and then we saw gold making all-time highs in the Indian markets, and then there has been some redemption with money moving yet again in case of equities. I mean, you look at equities and currencies and commodities as well. Globally, how have you seen the money move around?
Well, I think, Manisha, it's been, if you're looking since, let's put our minds back to, say, October, we've seen a dramatic fall as far as US dollar index, and you've seen equities have a nice bounce to the upside or continued movement, and that Christmas period and then even into January. So February was a little bit sideways, but overall it was fairly positive. So it's been a really strong start to the year, and also China re-engaged. So if you're looking at movement, I think fast money finds the best return at a specific time frame. And we've seen such dramatic moves from currency trading perspectives, where you've seen yen move from 150 to 128 back to 135. There's just one example. This is euro, pound, Aussie. Have a look at what's happened as far as energy prices. So all of those involved markets, or the way that they move, everyone's got involved in fast-moving markets. And I think that's where the retail land has really found significant profits really since October, November.
Oh yes, most of the global banks and brokerages still believe that we could be making all-time highs in the dollar terms as well in this year. That could be in the second half of this year. That is when the US Fed interest rates will peak out, and the concerns that Chirag just spoke about, whether it's about from equities or real estate or the recession concerns, all of that could be supporting gold. So Peter, this one is to you. Where do you see gold as a best case scenario? What is the range that you're working with for the rest of this year now? And are you also in a camp that believes that we could be inching towards all-time highs?
Well, Manisha, I mean, we've got 10 months to go, and this is a very unusual year. First off, the dollar, when we hear news as far as good news, the dollar doesn't seem to move. When you hear bad news, the dollar absolutely crumbles, and that's been very evident over the last matter of months. So build that into your case, or your best case. I really think that probably in the maybe sometime third quarter, moving into fourth quarter, I won't be surprised to see gold 1950, 2000. And yes, I won't be surprised at all with the inflation story and trying to manage that with higher energy prices, that gold probably will take out an all-time high this year. It's going to be wild. It's going to be exciting. And that's what traders want. They want movement. And 2% last week, Manisha, builds on that.
All right. So the demand is going to be on the stronger side. People are buying gold, and with the kind of narrative that we are getting into in this year, the rest of the year as well does not sound so great. So gold in your portfolio perhaps could give you that edge that we keep talking about at all times. Thank you, gentlemen, so much for joining us today and talking about all things gold. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.